All right, guys, back to work. I know weekend's over, holiday is almost here, but we got some work to do here this week. Got some great trades setting up for Tuesday's trading session. It is Monday evening after all. It's the 22nd of November, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Tuesday's trading session. I got a great video in store for you guys and gals tonight. Charts are already in the background. As you can see, S&P's ready, Nasdaq's ready, oil is ready as well. Glad to see you are ready right along with us. A lot of great trades setting up for tomorrow. Had some very strong moves down on the S&P and the Nasdaq. Got some nice trends on the E-minis. And of course, oil is flat as a board with a nice big juicy range on the oil. You know me, I love range-bound markets. Buy low, sell high, fade those breakouts. We're going to break down all my favorite trades in tonight's video. I'll also make sure we cover all the stuff to kind of stay away from tomorrow to keep yourself out of trouble, whether you're trading on your own or whether you're trading with us tomorrow in the trade room. As always, before we jump in and get the party going tonight, talking about the best trades for tomorrow, make sure you subscribe to our YouTube channel. I publish this video every evening, my best trade ideas. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel. Hit the little bell icon so you don't miss tomorrow. If you have any questions for me, drop those questions in the comments section. I would love to answer any questions you might have along the way. And as always, if you guys enjoyed the video as much as I enjoy making it, do me a favor, hit that like button for me here tonight on this video newsletter. But enough of the intro though. Time is ticking. Let's get ready for Tuesday's trading session. What do we have here setting up for Tuesday? Well, let's see. Big strong move down on the E-mini S&P. Anytime we see this much strength in one direction, I am looking for overhead levels of resistance so I can sell that bounce here. Now, I definitely do want to keep my eyes open for a range. I'm also watching to see if the market will keep on going lower. So there's quite a few different variations of the strategy for tomorrow. We're going to go over all those different, whether we pull back, go sideways, or go lower. I'm going to make sure you guys are covered no matter what the S&P does here tomorrow. Over on the NASDAQ is similar to the S&P in the sense that we had this big move down here, but you'll notice one big difference. There's an obvious range right in the middle of that chart here tonight. Anytime I see a trading range, there are 4 different types of breakout patterns I always look for, and that's on the breakouts. We could also see possibly a full reversal and a pendulum swing going higher, which between you and me could slingshot back into those all-time highs here for tomorrow. So there is no shortage of tradable opportunities on my radar for the NASDAQ. And as I mentioned in the introduction, oil is flat as a board right now. Love range-bound markets. We're buying low. We're selling high. I would love, that Friday session last week had that big move down on Friday. I would love to get short on this oil right now, but you'll notice there's this big support level in my way, and combine that with a strong rotation off the low. I'll tell you, the buyers have a definite potential reversal on their hands here tomorrow. We'll talk about how to trade the reversal as well as how to trade the breakdown on the oil. So strong trend on the S&P, range trend on the NASDAQ, and a true range on the oil. It's going to be a great video, a lot of great trades on our radar for tomorrow. Speaking of tomorrow, before we jump into these charts here tonight, let's just make sure we're all on the same page for tomorrow, because the next couple of days here are going to be pretty important as far as how the news is scheduled. Of course, we've got Thursday off for the holiday, and Friday is one of those early closes. So it's really one of those days where, for the most part, professional traders will take off that Thursday and Friday, which means they've got Tuesday and Wednesday to make their money, right? Make their stuff and money for the holiday here this week. So we look at this news going into the next couple of days, and you can see right away they have pretty much piled everything into Wednesday. And that just really, to me, tells me that tomorrow is a very, very important day, because as you can see, tomorrow is kind of the last little clear session we have here before we run into the holiday here later on this week. Look at Wednesday, right? Just an absolute peppering of news on Wednesday. any experienced trader knows that may make price action difficult to trade on Wednesday. Obviously, we'll talk more about Wednesday in tomorrow night's video. But really, for right now, though, my focus tomorrow is I'm pretty excited about tomorrow with some big moves today, and again, a relatively open schedule for tomorrow. The big news, of course, tomorrow is that PMI number at 9:45 Eastern Time. That will definitely be the big market moving event here tomorrow. We do have a lot of other things going on right now. We're hearing from the U.S. President Biden today regarding the pick, right, of Jerome Powell for the new to stay on as the head of the Fed. We've been hearing a lot about the oil reserves and trying to get inflation down. There's a lot going on out there that is not scheduled on our schedule for tomorrow, but that is definitely the big market moving event here tomorrow at 9:45 Eastern Time. So very high expectations tomorrow morning in our trade room as we try to make the most of this, what is pretty much a wide open space tomorrow as far as news goes before that complete data dump coming in on Wednesday morning. Don't forget, speaking of trade room, 8 o'clock Eastern Time, we're going to trade this stuff together. I'll put all the membership details. I'll put all those links you guys need in the description of the YouTube video. Grab those links, get registered on the website, and I'll see you guys tomorrow morning at 8 o'clock Eastern Time. We'll get prepped up and we'll trade that PMI composite flash reaction at 9:45 Eastern Time. We'll come back and we'll put together a game plan for that very busy Wednesday trading session. We'll come back and talk more of that here in tomorrow night's video. Let's get back to our charts tonight, though. S&P's ready. Nasdaq's ready. Oil is ready. Let's jump first with the S&P 500. The main takeaway right now on the S&P is strength. Definitely strength. There may be a hidden range in here somewhere. There may be a range kind of buried in here somewhere. We'll wait and see how that plays out tomorrow. But for right now, though, the key takeaway on the S&P is there's a ton of strength going lower right now. Anytime we see this much strength in a trending environment, there are really kind of three basic types of pullbacks I look for. And we'll also want to keep in mind that anytime we see this much movement in one trading day, this would also go along with the NASDAQ as well. We have to anticipate tomorrow could be a little bit of a sideways range, which, as I mentioned earlier, wouldn't upset me at all. I don't mind range-bound markets whatsoever because they're pretty easy to trade. We'll talk about that here in a moment as well. So very strong move down. I got a couple areas here you can see that I'd like to be looking at, key areas of resistance. You could argue even this area overhead, this trend line overhead. I'm not quite sure about that trend line overhead. That's going to be a pretty bull market at that point. So we definitely have a couple key areas here I'm watching as overhead resistance to look for some sell setups as we go. I do want to anticipate a potential range down here. Could definitely well show up here at some point in the overnight. And then you have to think too, my runaway zone is down around this 69 to 59 area. The market may continue here to slide going lower. We get some pretty big objectives waiting below us as well. So I want to make sure of a plan for the market running lower. How do we sell as we pops though, right? If it pops off this low, how do we sell into this move, right? Going higher here. Lots of strength going lower. Very good chance there'll be a lot of bears selling into that pop, looking for a retest of that low. Three different types of pullbacks basically, right? Three types of pullbacks. A shallow pullback, basically a pullback that does not return or does not test the high of that channel. A shallow pullback will be great for a trap. So anytime we see shallow pullbacks in a big strong trend like this, we know the odds are pretty good they're going to retest that low. We just don't want to sell that low. So a trap entry here would really be my favorite entry on a real shallow pullback. If we get a deeper pullback, get above the moving average, get up around the high of that channel now I can try to, speaking of traps, I can try to kind of rope in the buyers, wait for those buyers to try to buy that reversal. Once those buyers get long, I can look for what I call a failure into a pullback combination as we go back lower again, right? Imagine now the buyers get fooled into buying that pullback. Once they fail, all their stops are sitting right below that low. There's your failure and your pullback combination with a retest, right, of that low. And then if we really get what is probably the most desirable pullback, right, up in this, 4,700, 4,701 half area. If we can really get a really deep pullback now up in this area here, now what you want to remember is the strength of that pullback is very strong. So it's usually best to wait for that 1-2 for the buyers and then look for that failure into what usually ends up being a trap combination as we go back up or back down to retest the low, right? So hopefully by now you can kind of see the idea here. We expect there to be a retest of that low. If all I get is a shallow pullback, then I look for traps, because traps are my favorite way to avoid selling too low. So think about a trap setup here, right? Get above that prior, swing a trap setup on a real shallow pullback. If they can get above the moving average here, run into the top of that channel, now just simply look for a way to rope in those buyers, get those buyers to come in and try to buy that pullback here now. With all that momentum, it's just a matter of time before those buyers fail, right? Get that failure into that pullback combo, right? Love those failure into pullback combos for that move back down to that low. And then again, if we really pop up, and this is where we'll have to look and see if we get a possible reversal. I'll talk about reversals here in a second. If we really pop up, then at that point, now remember, anytime you see a strong move in one direction, you expect another leg in the same direction, right? So give them 2 tries now. Once those buyers try twice, now we know exactly where their stops are. Now we know where their pain points are. And with this one, it's oftentimes a failure into a trap combination. I would love to think it would come right over and give us a pullback, but oftentimes doesn't. I'd love to think it'll pull right back for us. And if it does, that'd be great. Like a little 2-try failure into a pullback combo. I would love that. I would love that failure into pullback combo. It just simply doesn't happen very often. It'll usually be a failure into a trap setup, and then that short from there. So that's the general idea, right? Get up off this low, use one of my failure patterns to sell into those buyer stop losses. And then again, do we get that failure into pullback combination, or do we see it like I hope we get, a really deep pullback, 1-2, grab that failure and that trap entry. Again, the trap is great to avoid selling too close to those lows right now. Now, how do we trade reversal right now? The reversal is going to be a little bit tricky because we have that trend line coming in. A reversal is pretty simple. We have to get above the moving average and the buyers have to hold it. So at any point, if we get above that moving average and the buyers come in and they actually hold that pullback, now this market is officially reversing. We have to think that that trend line overhead is going to be the next kind of objective to get to. And so we've got to kind of thread the needle here. I can draw a new channel off the high. I can mark up that low, and I can look for that first test, because as we always say in our trade room, the first test is always the best test. Now remember, if the market just simply pops off the low, that's not a full reversal yet. We would want to wait for the buyers to try and then sell it back down, right? But if they can hold that pullback and jump off the EMA, now that 1, 2, 3 reversal pattern now gives the buyers the control, and we can mark up that high, we can mark up that low. This, of course, not being drawn to scale right now, and we can drill down to our faster time frame. We can find that entry off the low of that channel. Now, most of the time, if you were to kind of drill into the low of that channel, most of the time these will be either a trap or a failure into pullback combo as we come off of that low, right? So if you were to kind of zoom in on that channel, again, this is a slower time for this is a 5,000 tick chart right now. If you were to zoom in on that channel, a lot of times you'll get those failure into pullback combinations. Now, I'm not going to go over all those small details about how we actually trigger the entries and qualify the entries in our trade room, but I do go over all the entry patterns as part of our free quick start class. If you haven't grabbed that yet, I would definitely take that free quick start course on our website. You'll learn how we adjust to changing market conditions, how we find the best levels of support and resistance for those conditions, and most importantly, how we trigger the entries using price action with things like failures, traps, pullback combinations, and of course strength moves. You'll learn all those details, give you a full roadmap to kind of bring you right up to speed with how we trade every day in our trade room. Grab that quick start class. I'll put that linked up there for you in the upper right hand corner. So of course, the next time I say strong move down, pullback with a buyer failure into pullback combination, you'll know exactly what I'm talking about. I've got hundreds of examples of these entry patterns inside of that free class. Now, one more thing you want to keep in mind here is, of course, if we go sideways here right now, right? If we go sideways on this now is where that range will kick into gear. Whenever we find a range, ranges act like magnets. So you want to think about finding a level of resistance above. Wait for the price to get above the range. The range, again, acts like a magnet. So wait for the price to pop up, get up into an area of resistance. And there's lots of ways you can find levels of resistance: expanding triangles, range expansions, pendulum swings. This, of course, being a simple way, right? A prior swing, right? We want to find those levels of resistance up overhead and then simply wait for the breakout. Wait for those buyers to try to buy that pullback. Think about where their exits are and just simply sell right into those stop losses. It's a remarkably easy strategy. Again, bear market into a range. Range is the magnet. Just wait for that price to pop up above the high of that trading range. Look for that buyer failure and sell it back down. And then don't forget a little bit more advanced tactic on this, and we'll talk more about this on the oil, is as we're going lower here, if the market does rotate back down, we're still very bearish. And so at this point now, as we're making that what we call pendulum swing, the amount we go above the range is equal to the amount below the range. As we're trying to take out that pendulum swing, I can now find a new channel and I can sell that first test, right, off the high of that channel with my failure patterns, my pullback combos, my trap entries, right off the high of that channel. That's how I would like to trade this if we go sideways here. And this range, of course, could happen. It could happen here, it'd be a little bit lower, a little bit higher. Same basic idea though here. Wait to get above the range, rope in those buyers with a buyer failure pattern, and then trade that rotation as we take it lower. You'll see a lot more examples of that again inside that quick start class. What if we go lower here? What if we keep on kind of grinding lower here? If we grind lower, this is going to be classic two-try trap, right? So if we go lower here again, that trap right there is an easy money trade at that point. This is a classic setup. Love these trades in our trade room. Strong move down, shallow pullback, lower low in price. That trap is a money trade, one of my favorite trades, especially when we get a lot of momentum going lower here. That'll be an easy short there if the market kind of keeps going lower. If it really if it really kind of grinds and grinds and grinds, it's basically a spike in channel. And once it becomes a spike in channel, you know the base of that channel is always where the money is. And so in that situation, what you want to do is wait for that pop up, wait for those buyers to come in, try to get, try to reverse it. You have all of this momentum going lower. Just wait for that buyer failure. And again, as I mentioned before, those failures oftentimes turn into pullback combos, right? So if it does start to grind down, I'm not really in the business of chasing the move lower. I want a better risk reward ratio. I want a better winning percentage. And to get that, you'll want to wait for that pop up. Think about the base of that channel, that buyer failure, that seller pullback, and again, the retest of that low is your objective. Now, of course, the markets are always throwing curveballs at us, right? Especially in the overnight right now. So definitely make sure you come out and join us tomorrow morning in the trade room, and I'll fill in any gaps that I might have missed on that. S&P, nice strong run going lower. We'll see if the market turns sideways into that range here overnight and get a pretty good plan for it. How about the NASDAQ here? NASDAQ is very similar in the sense that there was a very wild ride on the NASDAQ today. You can definitely see that, right? Big move up, big move down, pop back up, another leg lower here. We are definitely bearish at this point on the NQ. I don't think there's any question about that. The one big difference, as you can see right now, is that trading range. There definitely is a much more well-defined range on this NASDAQ. Ranges act like magnets. Now, am I going to buy this market, try to go back into that range right now? No, it's a little bit too bearish, right, to be a buyer on this. Anytime we see a strong move in one direction, we expect a pullback and a retest of that low. A lot of this is going to be very similar to we saw or we talked about on the S&P, except there's a little bit of just a little bit difference here, right? There are 4 different types of breakouts that I like to look for whenever we have a range in the chart, right? Now you'll notice I've got the underbelly of this range all marked up, right? This is a pretty easy idea. There's your range. We break down, we kind of get that breakout pullback, right? That's one kind of way I'm looking for it. Another way would be if we kind of get up into this trend line coming down. That'll be the deeper pullback. So we want to keep those in mind as we go. Again, everything wants to come back and retest that low. Can we sell off the underbelly of the range? Do we sell off that trend line? That trend line looks a whole lot better on the Nasdaq than it does on the S&P, right? The S&P has that big flat trend line up overhead. So I would love to sell one of those. I also, of course, know that whenever we see these breakdowns like this could continue going lower easily. This could easily be one big measured move here. And so it definitely could keep going lower. You'll notice I marked up the amount we went up to the amount we went down, and we conveniently are sitting right on that double down area right now. The market could easily keep going lower though. You'll notice they've already broken free of that pendulum swing support. The amount above the range is the amount below the range. There's definitely no doubt about the strength of this move here. So if it does want to keep going lower, we'll talk about the plan on that. And then who knows, right? Maybe it does go sideways down here, and we should probably be ready for that as well. The reversal is the one that's going to be more difficult here because you got this trend line coming down overhead, a lot of strength, lot of resistance kind of waiting up overhead. Not impossible for a reversal, but definitely going to be a little more difficult on the Nasdaq than it will be on the S&P. At least it looks like here for right now. So very similar in some ways to the S&P. Again, if we can get a shallow pullback right now, a trap is definitely going to be your best friend, right? So shallow pullback trap, right? We pull back, we barely touch the moving average. Buyers once, buyers twice, little trap high there for the short. Not a bad idea because you've got so much strength. The odds are pretty good. We're getting their leg going lower. Do we get a little bit deeper pullback, right? Get above the moving average, get those buyers to be roped in, get those bulls trying to get long, sell into their stop losses, sell that pullback off the moving average. And remember that failure into that pullback combination, retest of that low is the objective. And then again, you got that big measured move for some bigger targets waiting down below. Do we really kind of V bottom off this low, run into that overhead resistance trend line? At that point now, buyers try once, buyers try twice, again, because the momentum is so much stronger. Again, we're still a bear market at that point, but a very strong pop off that low. Let those buyers try a couple times, especially with that range acting as a magnet. Once they try a couple times, their stops are sitting right below that low. I can look for that buyer failure. And remember, whenever we see a real strong pop, I would love to get that pullback combination, right? That 2-try failure into that pullback combo. I would love to get that failure to pullback combination. It's just not as likely when it really pulls back really deep. What is oftentimes going to happen is it will start to collapse and run lower, and your best entry there is always going to be that trap to add one more position on before you retest that low, right? So buyer failure, 2-try failure into that trap entry. Very similar here, right, on the S&P, or should I say to the S&P. Now, how do we reverse going higher here? Well, first of all, if we do reverse going higher, you have to kind of think about this would be one big pendulum swing. And so that's where the market's going to want to go. It's going to want to get up around that 16,640 area, 16,650 area, give or take a couple ticks or here, right here and there. So if we can get this market now, get rid of this channel here, right? If I can get this thing to get up above that moving average, if these buyers can hold this pullback and give me a nice strong run higher, again, that is a change in momentum right now. That 1, 2, 3 reversal, we know pretty much where the market wants to go. Now we're going to trade that rotation, find that new channel, mark up that high, mark up that low, drill down to your faster time frame. And again, these will almost always be something like this as it goes, right? As it goes higher, mark up that new high, find that channel, mark up that prior swing, find your trap, find your failure, find your pullback combo. And again, if you haven't done so yet, make sure you grab that quick start class and you'll see a lot of examples, real examples of these traps, failures, and pullback setups as we rotate off the high of that channel. Again, objective now for those bulls, undoubtedly there up around, right, that pendulum swing going higher here. So that's going to be an idea of kind of how to trade this thing as it reverses. And then if it really starts to cook here, same thing for the S&P tomorrow, right? Much of the S&P, if it really starts to push and run higher, it's hard not to think they're not going to make it try to make a run up to that all-time high again. That does seem a little bit unrealistic tomorrow, but hey, anything is possible these days with these markets, so I wouldn't count that out. The key right now, though, is we're a little too bearish just to want to buy this at this point, so we have to wait for a turn in momentum with that 1, 2, 3 reversal and then buy that first pullback and see how we do going higher from there. We'll know more tomorrow, obviously, in the trade room. Now, what if we go sideways down here? If we go sideways, same idea as the S&P. Right, if we start going sideways here overnight, chopping around, going sideways, it's a bear market into a trading range. Think about where you've got levels of resistance up overhead. Wait for that pop up. Don't chase it. And whatever you do, if we go sideways down here, do not get fooled by that pullback. Wait for that pop up. Wait for those buyers to come in and try to get long and just hit them right where it hurts, right? Trade that failure. And then remember what I said earlier on the S&P, same thing for the Nasdaq. You can mark up that, right? You can mark up that pendulum swing, right? The amount we go above the range to the amount below the range, that kind of tells you where the market wants to go next. While we're trying to get there, find that new channel, right, off of that high or off the lows, and then sell off that high. All right, I know it's a little bit complicated, a little more advanced, right? It's a buyer failure off the high of the range. And then, of course, into that first pullback, the first test is always the best test, right? So sell into that pop, sell into that buyer failure, and then trade the turn as we roll over and push lower. That's my favorite strategy when it comes to a range-bound market, right? Getting above that trading range, short those pops with failure patterns, and then trade the rotation right back down again. Again, like almost identical to the S&P. If we were to get a shallow pullback and run lower right now, everybody wants that trap. We call these 2-try trap setups in our trade room, right? You could actually get extra bonus points on this if you can line up a channel on this. Not required. The channel's definitely not required, but it sure won't hurt on that entry. Most important thing is whenever you see a strong move down, a shallow pullback, a lower low in price, right? That strong move gives a sense of urgency for the sellers. That shallow pullback doesn't give the sellers a chance to actually get much on that move. And of course, that lower low in price does a very good job at confirming that move. That trap high is an easy money trade. If we were to, for example, if we were to here, start to roll lower, right? Start to roll lower. What I'll do is I'll find a trend line off that low. I'm going to mark up that new channel off that high. I'm going to wait for that pullback. Now, most of the time, these spiking channels are going to want to go back around the base of that channel. It's not required, but whenever I see a real strong push down and the market kind of grinds and grinds and grinds, most of the time, a lot of times, right, that kind of beginning of that new spiking channel is oftentimes where everybody wants to sell it. So I'm definitely going to keep my eyes on that area if the market rolls lower. But it's really not that difficult, right? If the market pushes lower and starts grinding down, that anything now that pops off this low, once this thing gets up off this low, again, you've got all of that momentum. The odds are very, very good. At some point, we're getting back down to retest that low. I'm not a very big fan of trying to pick a top on those pullbacks. I'm trying to use a relatively small stop. My kind of specialty is helping traders with small accounts grow those accounts into being larger accounts, right? And to do that, you got to keep your risk small. So in order to time the entry, I like to wait for those buyers to try to get long, and then of course, right, just sell into their stop losses, right? So if it just kind of grind lower there on that, wait for that pop up, right, and then wait for that buyer failure and just simply sell it right back down again. And that should put us down around that measured move. We'll see. Obviously, we'll see how far the thing wants to grind lower here. So at this point now, really, it's just a matter of time. Whether or not we get the pullback or whatnot here. I would also anticipate too, if they did, let's say for example, we pull back, get that buyer failure, right, and the market kind of runs lower here. You got to think too, mark up that low, mark up that high. There could be more shorts, right, coming off of this channel, right? Buyer failure, pullback combinations. You'll see a lot of this type of stuff in that quick start class I mentioned earlier. Definitely grab that link up there in the upper right-hand corner. Take that free quick start class, because that definitely may be the case here too, right? So we pop up, the bears get busy, right, doing their bear things. They sell into those, right, into those stops, right? Price, of course, takes off the downside. We mark up that low, mark up that high, right? Price, of course, now pops back up. Profit taking off the measured move, for example. The buyers come in, same thing, right? Failure into pullback combination. And again, I'm just simply kind of drawing on the chart right now. You'll see a lot more examples of this stuff inside that free quick start class. All right, so keep an eye on that new channel, right, as we go lower here, and then we'll see the reversal. I would not be totally surprised here if this market does reverse just because of, look what happened today, right? So definitely wouldn't be totally surprised on that. We'll know more here in a couple hours in the overnight. Let's grab a look at the oil here, and we'll get us all finished up for tonight's video newsletter. What's going on the oil right now? Oil is a range-bound market. Day begins, of course, the week begins pretty much with a range here. That range, of course, is going to be the magnet, at least at this point. Right now, we have kind of back and forth here. We've heard a lot from the U.S. in the last couple of days about releasing the strategic, oil reserves. They've tried to recruit other countries to agree to the same thing. It hasn't exactly been an easy negotiation, and you can definitely kind of feel that maybe a little bit of nervousness here right now on the oil. Now, as I mentioned in the introduction today, we definitely have potential for a reversal here on oil. If you recall, there was that big drop down late or early in the day on Friday, but late in the week last week. And when you combine the strength of this pop going higher along with this very obvious support trend line, it's not difficult to think this could be one try for the bears, two try for the bears, and just a relatively easy kind of short squeeze back up to retest that 79 area. That's not difficult to see that coming. So we definitely do want to anticipate that and be ready for that tomorrow. But right now, though, we're a little too bearish here right now to try to be buying this. So at this point, I'm still trying to use that range as a magnet. The biggest hurdle we have right now is going to probably be, again, a combination of that rising support trend line along with the strength of that last move. Remember, anytime we see a strong move in one direction like this, we have to anticipate another leg in the same direction. When I have a range, but I have the market kind of rotating up off of the low with a lot of punch as it goes higher, this is exactly where a two-try failure would really come in handy. Buyers once, buyers twice. You can see, though, we've got to kind of get that to work, but get it to work around this trend line right now. That's the biggest problem that we have. So how do we sell it? How do we buy it? Well, honestly, the buyers have a pretty easy job right now. They just have to hold this thing, really. right? We're not quite there yet, but if I can get this market maybe to either bounce off that trend line or 1, 2, 3 break going higher, that's a pretty easy trade right there, right? 1, 2, 3 breakout. Definitely got to get a clear breakout here because, again, all that momentum from last Friday, you got to think there are probably more bears up here would love to short this thing back down again. But if they can go 1, 2, 3 and get this thing going higher here, I can mark up that high, I can mark up this low, I can drill down to my faster time frame, and I can find one of my favorite entry setups, right, to buy off that low. Again, this is a 3,000 tick chart. You can see in the upper left-hand corner. We're not going to trade a 3,000 tick chart tomorrow in the trade. What we'll do is we'll drill down to our faster time frame. We'll find our bear trap entry, our seller failure. We'll find our pullback combination. Again, you'll see a lot of examples of that in that quick start class that I mentioned before. But that's one way to buy this as it goes higher. Another way to buy it as it goes higher would be that 2-try breakout, right? That 2-try trap. Strong move up, right? Real strong move up, shallow pullback, higher high in price. Now you've got an easy money entry on that, right, on that trap. Okay, that is always something I'm watching for, right? So real strong pop up. That'll be enough to break us free of this range magnet. Strong move up, shallow pullback, higher high in price, traps, baby. Always something to keep an eye on. And again, not required, but if I can find a channel to buy off a channel low, even better, right? Even better. And then that reminds me too about that kind of melt up. You know, anytime we have a big move down that reverses, that short squeeze, right? So short squeezes can be kind of tricky if the market is to pop up and start to kind of punch and grind higher. You know what I'm saying, right? Kind of pops up and grinds up there. What do? I find that new channel. Again, kind of mark up those prior swings, wait for that trap, that failure, that pullback, right? So if it pops and starts to grind, just draw that new channel right off that high, wait for that pop. Do not mistake that pullback for a reversal. It'll oftentimes be pretty strong, right? You got that, again, trap setup, failure setup, pullback setup, right? 3 out of the 4 setups we teach in that quick start class, and you can learn more details there, right? So that's the idea as we go higher here. Is it a 1, 2, 3 breakout? Find that channel. Is it just a jam higher, shallow pullback, higher high, grab that trap, right? Or is it kind of a pop and a grind, right? Pop and grind, pops and grind, mark that high, mark that low, find those traps, right? That trap, that failure, that pullback combination, right? As we make our way back up to that, again, that 79 and change up there overhead. That's how the buyers like to get it. How about the sellers here? The bears have all of the range is helping the bears right now. I've already got one. If I can get a number 2 and pulling back here right now, I would love to grab a short, mark up that channel low, mark up that channel high. This would be a really nice short right here, right? Little trend line overhead. At this point now, again, because you've got all of that momentum for the bulls, again, not enough to call us not enough to call it a bull market, right? The buyers would have to hold this pullback and go, right? That will be the 1, 2, 3 reversal pattern we've talked about so far. A lot of momentum for the bulls, not a bull market just yet. So we want to give those bulls the benefit of the doubt, right? Let them try once, let them try twice. And again, one of my favorite techniques is to draw a trend line off that low, up around that high. And again, I'd like to combine that trend line, right, along with that short. So keep an eye on this, what would be a 2-try failure, but it's like 1 part 2-try failure, 1 part 2-legged pullback, in the sense that we've got, 1 leg up, 2 leg up, get underneath it and hit it from there. We may also get this market to run lower here and not give us that pullback. So if it was just to run lower here and then get stuck inside this range right now, what would you do? Yeah, you'd mark up that high, of course, find those levels of resistance. Wait for the pop up, wait for the buyers to come in. Again, this range now, right, if it goes, can it get sucked into that range here? That range acts like a magnet. Buyers, of course, pop it up. Let them try to buy into that high, sell right into those stop losses with that buyer failure pattern. If the market was to roll and go lower, Okay, this is where the pendulum swing comes in handy. Mark up the high, mark up that low. This puts a big bullseye right around that 74.45. So we get two big objectives. One, retesting that low. Second one, completing that pendulum swing. As the market rolls lower here, you want to find that new channel and trade that rotation. This is nothing more than we talked about earlier on the S&P and the Nasdaq, where market might go up, it may fail, then as it rolls lower, right, we can trade that rotation, right? Because again, that momentum, when it swings off the high, it doesn't usually stop right inside the range. It may take a pit stop into the range, but it's going to want to continue to complete that pendulum swing on the opposite side. So again now, right, imagine now, and there could be a few different variations of this, right? It may go 1, 2, 3 and roll lower, right? There's my new channel. And again, I'm looking for that short off the high of the channel there, right? It may just simply dump, right, back down from here. I'm finding that channel. So there'll be some options here as we go, but that's the general idea behind it, right? Let's get this thing to make that move, get that momentum back on the side of the bears, get me clearing through this trend line. And then again, as we roll lower here, a lot of different ways in which we can trade this, right? If it grinds lower, right, mark up that low, find that channel, grab my trap, grab my failure, my pullback combo. I know I sound like a broken record right now, but that's the good stuff, right? That's where the best setups are always going to be here. Those traps, those failures, those pullbacks. And again, we know where the market wants to go at that point. So now it's just a matter of time before we figure out kind of what we're going to get on this, right? Do we get that nice, easy, 1, 2 trend line channel, right? And off that trend line, do we get that set up? Do we go into that range and chop around? In that case, just keep your eyes on the levels up overhead, get up, buyer failure, back down, right? Or do we kind of, run lower, start to grind lower, and we're finding those hidden channels, trading those, right? Trading those traps, those failures, those pullbacks back down from there. Those are going to be my kind of key setups here as you watch this oil. And again, let's see what happens if the market pushes higher here. Because again, I think this is definitely a scenario where you got some fundamentals going on right now. They're talking about the oil reserve. You get an obvious support trend line, and you got some pretty decent momentum there for the bulls. That is definitely a recipe for a nice short squeeze tomorrow. So now you guys know how I'll be looking to trade it here tomorrow morning in the trade room. Now, speaking of trade room, okay, we've gone over the entire plan tonight on the charts. We'll give it some time overnight. Tomorrow morning, we get some work to do tomorrow morning to get ready here ahead of the holiday. Again, the holiday is going to shorten this week up for us, so we got a lot to work on here for tomorrow. What I'll do is I'll put all the membership links down in the description of the YouTube video. I'll put a big button for you guys right below me tonight on the website. So grab that link in the description, hit that button below the video tonight on the website, get registered for tomorrow's trading session, and we'll do this all together. Learning this stuff is the easy part. The hard part is executing it correctly tomorrow, and that's why I'm looking forward to seeing you tomorrow morning in the trade room. If you have any questions, don't be afraid to call the office. I'm always here to help. Call that toll-free phone number if you have any questions on the website, and I'll be here to answer questions in the comment section if you have any questions along the way. Hope by now you guys have hit that like button. Hope you subscribe to the YouTube channel. Hope you learned a lot in tonight's video. Hope it helps you kick some butt tomorrow morning, wherever you're trading. But until next time, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.